JV Cycles here with the weekend update on March the 1st. So question is, what kind of correction are we in here? If this is the transition into a bear market, this first move of the correction, the A move, should not be over. We should continue down very quickly on Monday and continue this move before we get a real bounce. But if we see this bounce continue up Monday, Tuesday, I think, this correction is not bearish enough. We don't have enough selling momentum, and I think we will squeeze right back up and continue this big sideways topping formation with a top around April. So, big question is up or down early next week. And if I make a 1 and 2 and 3 cycle offset of my 4-week cycle, this is going back 1 cycle, I put an arrow here, 2 cycles, another arrow, 3 cycles, another arrow, and then let's remove this to make it easier to see, like this. Well, it got a little bit shifted, but you see. So we are here on Monday, or let's start here. We are here on Monday. Is that, or what happened 1 cycle back? Well, we did get a bounce, but this was a more safe place to buy. If we go 2 cycles back here, is that a good place to go long? No. It was a little bit later here. And is this a good place to go long? No, a little bit later here. So obviously the cycle has a bearish bias for the next couple of days. It suggests more downside. So that supports the case of this correction, or this A move, is not finished. So let's zoom out a little bit, as I always do. Here is the 3.5-year cycle in red. We have weekly data, and we are in this yellow topping part of the cycle, and my general topping scenario here with a dotted line. So I don't know exactly when we roll over and break down and start this bear market. It could be now, or it could be a little bit later. And in this bearish part going well into next year, there is no guarantee that we will have a bad deep bear market. It is also possible we go mostly sideways here. But one thing makes me think we could have a bad bear market, and that is the 28-year cycle, which now is bearish for the next 10 years. And as you see, here is the S&P inflation adjusted data, and we are at the very top of this channel. That should be a warning sign. Also, we have this analog from the 28-year cycle in the 1970s. That one really crashed down here. And we have other stuff here, like the Buffett indicator, the stock market compared to the GDP. It is very overbought, high valued. And we have the Schiller PE is also close to extreme levels. So I think there's a very high risk that this 3.5-year cycle will be very bearish. Then we have this cycle here of 17 weeks, and I'm not quite sure. I have these 2 scenarios very similar to where I started this video. Either we are currently right now in the bearish correction, we should continue down, and the other one is we do not have enough bearish momentum, and we squeeze right back up to complete or continue the topping formation. And one thing that supports this last scenario is the cycle. It has not yet topped. So it is a little bit early to start this correction. It's not impossible, but as long as we are ahead of this cycle top, you should be careful to get too bearish here. So both scenarios are very possible. And you saw my 4-week cycle actually do suggest more downside to come this next week. We have my daily wavelets S&P. So the bearish scenario would be something like this, and this first arrow suggests possible target for this first move down, and you can see we have broken my magic moving average here, and we are back testing it. Also we have broken this trend line. We could also look at this trend channel. Well, we hit the low and we're bouncing back up to this line that is broken, but well, we have this horizontal level. We did hit this January low and bounced. So with normal bull market rules, I would look for a low using this rectangle. I would look for a low around this point in 2 weeks, and during or within this rectangle I evaluate, does it look bearish? If it does not look bearish, then maybe you can go in, take your long position a bit earlier. But if the market behaves bearish, well, then you should at least wait to the right end. And this indeed is bearish action, so I would not touch any long position before 2 weeks time. And if we are getting a bearish market behavior, well, then you could look for a low even later. This is the rectangle for bear market with using bear market rules. So, but no clear answer to our question here. And then we have, this is my scenario for a bearish ABC correction. Normally something you only see in a bear market, and not very often within a bull market. So this one also suggests we should continue down next week, and we are only halfway in this A move. And as you see in this band, it does have a small reaction up right where we ended on Friday. So it's not uncommon to see some short covering temporary before we just continue down. So, but no real answer here. Will we go up or down this coming week? And finally, I have the weekly data for Dow Jones Industrial. So I have placed my 2-week oscillation here, marking 2-week oscillation lows. And as you see, when the market is very bullish, typically after an ended correction, you hardly see any corrective move in this 2-week oscillation. Similarly, in a correction, the bounce can be very small and almost negligible. Well, that's a lovely word. Anyway, I think this is the 2-week oscillation low, and what we are seeing here is a very sabotaged upswing. It goes only sideways, and look, we are at, well, it should turn down early next week. We have a possible trend channel here, drawn from this 2-week oscillation low to this one, and then making the top at this point. Well, we are near the top, and it is suggesting we should turn down and continue down to a lower low with this next 2-week oscillation low around next weekend. I think around March the 10th maybe. But again, this is no proof that we should go down next week. It only gives us a bias or a warning. Anything may happen here. If we start breaking up here, well, we could have a big rally and just a small reaction down here and then continue up. So I really don't have the conclusion, but I have drawn 2 scenarios here. If the market is bearish, we should continue down. If we don't have enough selling momentum, I think we will make a top in April. So, see ya.